Hello, everybody, and welcome to the Plus3 Futures and Commodities show. My name is Ben Maldonado. We're recording Saturday afternoon, January 15th. As always, I'm here with my partner, Barrie Hederachi. How you doing, Barrie?
Doing pretty well. Thanks.
January's been volatile. That's always good for a trader with proper levels. And I know you've been active and expecting more, huh?
I think so. I think January is going to be one of those months. We're going to be active, and it's good. So let's just do it.
Yeah, absolutely. And speaking of active, Bitcoin has certainly been active lately. We've been watching this thing and we've been tracking it as a proxy for risk and saying, in November, starting in November, December, that we were, if you look at Bitcoin, it was in risk off mode. It continues to be, although there was a very interesting development on Friday. Early in the week, we poked below this important level. Oh, and by the way, all these levels and the squares, Barrie's levels, and my levels are in a spreadsheet that we will post a link to, and we update this spreadsheet on a weekly basis, sometimes intra-week if there's enough activity. But you can get all the levels off of that spreadsheet. Also, while I'm mentioning it, when you watch the videos, like, subscribe, hit the bell, hit the alerts, do all the things that YouTube asks you to do so we can get the proper feedback from them. So here's the interesting thing, Barrie. It looks like we were set up, ready to go down and test this lower half square here. And then all of a sudden we popped up, pulled back, stayed on top of this full square, which if we can do it, it opens up a path up here to up over 50,000 again. By no means are we out of the clear yet, but that's the first bullish development in a while in Bitcoin.
You mean holding on the square for now, right?
Yeah. This low.
Well, at the same
right
time, we got that entire triangle working. So if we break down again, we go down there, we kind of squeeze into that cone that you have at the end of the triangle. And to me, that's very bearish. So
absolutely,
that could just drop right into where you have your cursor. So, 3,200, 30,000, something in that range.
I
agree. Don't
Mm-hmm.
forget your, the 69-day
time count. Yep.
Time count, which is coming around the corner, right? So
next week. Yep.
So it's possible we drop down kind of flush and put in a low. It's possible. So we'll see.
I agree. And it's interesting, a lot of different sources and different cycles and things are all pointing to next week being important. So, when you get these different metrics bringing you to the same conclusion, you really want to pay attention. So I think, a very probable scenario is the one you laid out where Bitcoin flushes down, makes a new low, and then puts in a low. And we will have to see how it trades after that based on these levels. Let me throw it back to you. Let's do the big five. And then I have a few commodities to highlight that I want to look at here.
Okay, let's do that.
There's the E-mini dancing on the line.
It's the E-mini weekly. Well, might as well start there.
Yeah.
We talked about we've been talking about this for a while, the 3 weekly squares up. These are 52-degree squares. And the sense here is, if it really can't hold above it, it's going to get weak. And if it really can't hold above the 156 square, then, expect some kind of weakness. So 46.85, 46.90 is where the red line is, the 156-degree line is, 156-degree line is. And, we've been sort of both sides of it, really can't hold above it and really can't quite stay under it, right? You can see all the crisscrossing going on. So there's a big old battle going on in here, and it ought to resolve to one side or the other. And I think you got to look at the daily to kind of figure out the details of how that might happen. So this is the chart we were looking at last week, and
the box from hell.
Yeah, really. ever since Halloween, right?
Yeah.
And, so it would look like a really tough environment, but if you really follow the levels and take your time, the setups do show up in between all the chaos.
Mhm.
And, that puts us right into what we talked about last week. I only really talked about two levels, talked about 47.26 and 46.93, saying that is firm above 46.93, but we really need to clear the 26 in order to establish, sort of a bullish scenario. And we couldn't do it. We couldn't hold above 46.93, and since we broke it, came right down to 4,600 level or close enough to it. So we're trapped between, 4,693 and 4,600. And, these levels I haven't changed for a while, mainly because, well, we haven't really left the area, right? So what to do? But I did talk about these 1/3 lines here. Let me change. This is square of 90. So 1/3, let me just put the 60s on here. And that clears up the picture a little bit. You can see the 60 degree or the 1/3 of the, of the 90 is pretty much where that line is. And so we can use this since we're kind of range bound. We can go with the 60 for now, which is 2/3 of the 90. So it's the same harmonic. So going into next week, just to keep it brief, it's clear that this is the line we really need to take out if we're going to continue some kind of a bullish scenario, and that is 47.50. So we need to clear that. That's 2/3 from the 90, or you can say 60 degree square here. And you can see it's played an important role. We have a pivot right on it up here, and you can see that, that week that we spent above around Christmas was right above the 60. Really couldn't get through, slip right back under it. Now, Ben, the important thing here is we're not just selling off. We're kind of hanging around in the same square, same area, right? All this news, all these things are happening, but we're just kind of holding value right through here. And we talked about how the bigger stocks, it really looks like some of those patterns look like distribution patterns. So we'll
Absolutely.
how that plays out. But so far, it's looking a little bit weak, right?
Mhm.
And this is setting up a possible ABCD down. But as far as trading for next week, I think we got to watch the same levels. 46.93 has to be cleared first, and then 47.26. So if we can hold above that, basically we're clearing the 60 degree line as well, right? So it's really, we need to clear that to the upside. And to the downside, we can't hold 46. We're probably going to visit half square here.
Yeah,
And
that
that's around
4,500 area.
4,500. I think there's a 100-point run that could be probably done in short order, right? Why not one day?
Or a couple hours even.
Well, yeah. I mean, look, over here, almost 3 days, 4 days, we had pretty much the same range.
Right.
And we did it on this day, so we could do it again. So just know the number is really around 4,600, maybe 4,590, right? Give it a little bit of a buffer there, but that's where the line is, and that's also the bottom of this range. If you're, so that's what we're looking for.
Hey, switch back to your weekly for a second. I saw something interesting from a timing standpoint. This 104, the second full square of timing, comes in around March 21st.
That's right.
And I've got some important timing in that area too. So it'll be really interesting, to see what we do going into that line from a timing standpoint and a cyclical standpoint. Because, the full squares have, the first one really, really sort of rocketed things out of that price range there.
Right here.
Yep. And it created some energy. So I'm really curious to see what happens when we hit that next square.
Well, I'll tell you what, if we kind of manage to stay in this range and we kind of go sideways into that, there's a high probability that knocks it into either a positive zone or it's going to knock it into the negative zone. So that's something we can watch. And I would say after a run like this, going sideways into the second square, it's very easy for you to turn it down. So just keep that in mind.
I'm with you on that.
It's a real good high probability. thing.
Mhm.
So for next week, we've got our levels 4,600, 4,693, sort of the early balance, but we really need to clear 47.26 to stay on the upside.
Yep.
Moving on to bonds.
Which has been a real good performer this year for anybody who's been short.
That's right. And last week we talked about, how we bumped up right at our level here, 60.20 before it sold off. And I brought in this 157.16 to be a key level of resistance. Well, it's obvious, right? Structural resistance.
Mm-hmm.
And as long as we're below that, the bonds are weak. And basically we had a 4-day counter trend, and we're coming back down again. It doesn't look super weak, but it's certainly weak. And if we're not going to manage to even get up here, and if we do take out the low around 154.20 or so, I think new lows wouldn't be out of the question, right?
I agree. And notice too that it took 4 days to go up and 1 day to basically get the whole range.
Clear it all up. Exactly. Yep. Exactly. So it's not done, let's just say.
Agreed.
So, okay, so that's the bonds, and let's take a quick look at the weekly bonds, see how that's. So weekly bonds, last week we talked about the 158.20, basically 159 level up here, and saying how we're weak below that. And then we have this box that we drew in
months
a while
ago
back to contain the movement. That's sort of the chop zone. So we're clearly, getting out of that crowded area, right? We're making our way down, and this doesn't look like there's any support, anywhere close by other than the low over here from last year.
Mm-hmm.
And if we go there, I think it wouldn't take much to slip past that just to flush everything out. So I think
Agreed.
That's something to watch. I think it's on weak grounds, especially on the weekly basis below 159.
Mm-hmm. Good levels on that.
Oh, thanks. So let's cover gold. Now gold, it's been like watching paint dry. Paint dries faster. Let's just say that.
More exciting.
Yeah. Well, look, the exciting part is kind of holding the momentum, right? It's not quite going down, not quite going higher, but it is, let's just say, on firm ground, right?
It's creeping. It's like creeping up,
Yeah, and you can see it's holding above this range here. So maybe I can mark it for everybody. So, just the fact that we're able to go in here, come back up, and then hold above this, to me, that's bullish, even though we're kind of in this whole thing.
Sure.
And it's crawling up the fork, and the angle of ascent is pretty much in line with the angle of the fork. So to me, that's bullish, more bullish than bearish, right?
Mm-hmm.
So I think it's just a matter of buying time. Just to wrap it up, 1832 was the level we were watching for resistance. And you can see how that level was tested a number of times.
Multiple times, yeah.
Right? Since Christmas. And we're hanging out there. Again, if we can take that out, I think we open ourselves up to at least 2,000 to the upside.
Mm-hmm.
And if you just use the channel, we ought to be up in this level to at least challenge the main fork. So there is upside available if this thing breaks. So 1832 is the level to watch to the upside. Downside, I think on top of this box would be the ideal place. Right in here, we should hold 1790 would be a good level to watch the downside. We're tightening up the range, but I think we're also getting close to some kind of a break. So let's just watch that closely.
Yeah, definite eyes need to be on gold and silver for right now.
So here's our weekly gold chart. We've been watching this compression going on for, months and months. And, the good news is it actually is compression going on for months and months, right? There's no doubt like this is doing something else. The range is getting narrower and tighter every week. And, that 1767 is sort of the key level I'm watching for the weekly to hold above, have the buoyancy to the upside. and we're, holding pretty well above it. And you can see we're kind of grinding our way, little by little grinding through that trend line. So it's, no raging bull market, but it's no raging bear market either, right?
No, it's
And
building like a ballistic base for an explosive move.
well, from by anybody's book, this is definitely fourth wave type of action, right? Churning action. So either we're going to go for the fifth, or fifth is going to fail, one of the two. And that's why we're going to watch this level, 1767. As long as we're above that, I think the probabilities are we're gonna go higher and make a fifth type of a leg. If not, it's a failed fifth, and we'll be the first to know. And if
That's right.
1767 doesn't hold. Opposite of that, our favorite here is crude.
What a move the past few weeks, huh?
Yeah, great moves. And so we're up to the half square where we kind of
It's
finished up the
decision
last
time,
leg.
right?
Yep. And this is an interesting point, being that we're getting right up in there again. If we break out of this, 90, it's like a no-brainer almost.
Right.
Right. And getting up to 97, 100 is also in the.
It's not a stretch at that point, is it?
No, it's not a stretch at all. So it's just really watching it right in here, because we do have a 45 going in there. And like we talked about it when we were at 77, we were calling out for 82. Now we got to 82. And looks like this cleared it, right? So any pullback looks like should hold above 82. And if they do hold above 82, those are the pullbacks you want to get positioned in to get a ride into 92, 90, 91 at least. So that's the daily shot and the daily levels.
And it's interesting, Barry, it's coming at a time where, I'm going to talk about nat gas today, that nat gas is setting up again in a bullish manner. So, I know they're not entirely related, but it's interesting that timing wise, they're both turning bullish.
Right. And they're not entirely unrelated, right? Heating oil,
right,
and all
right.
of this kind of going to theme. So this is our weekly. If you guys have been watching us, we had support down here where the box is drawn in around 64, 65. And we were looking for it to go and test the old highs. Well, here we are. The next leg is to see if we can clear this resistance at the half square level, which is square 52 we're using on the weekly, and if we can break out or not. And if we do break out, look, there's plenty of room, right?
Plenty of room to run.
Two squares is $110 without much of a problem. Of course, that would mean being able to hold above the half square, which is right around 84. So we're bullish, but basis the daily. We're watching this, make sure any pullback can hold above 82. And if it doesn't hold above 82, we're going to pause there. We're going to wait for it to resolve. But long as it's above 82, we're bullish. And as soon as this old highs get taken out around 85, 25 or so, or you can just use these old highs, then I think it opens up to 91 without much trouble.
Nice.
Thanks. Let's get dollar done. We talked about the dollar coming back to test the half square. I think we talked about 95 area being tested before all is said and done. And sure enough, we got there towards the end of last week. And now we're a bit of a struggle. So I don't think the fact that we went right past it, all the way down to 94.60. Structurally, we do have support there, right? You can see that. Move the square out of the way. So there is support, from these old highs, last October, we have that support. And I don't think it's done yet. We can't just break a main trend line and just be done and just turn around and go back like nothing happened.
Right, right. No, it's significant.
So we probably have a little bit more downside left. And so I would be cautious being long the dollar at this point, because we've been watching this thing sort of wind up and get ready and get up here to the 1/3 line we talked about last, a couple of times. So we stalled out there, came to the half. We have to watch, if we can hold above the half line, which is, right around 95, then I think we could probably grind our way up there again to retest the 96, 97 level. Otherwise, of course,
If we get
can't
stuck
hold 90.
below, it's
If 95
different
can't be
story.
held, then we're going to come back to, this 93 and a half, this area down here.
Mhm.
So we started. Let's just watch those levels to make sure we're on the right side. Look at the weekly dollar. Well, this is what happened, right? We looked at it last week. And if you guys follow every week, you can see what happened. We stalled up against the fork up there.
And the third, right? You have the third.
Yeah,
marked
and the
off.
third. Well, that's what squared it out, right?
Mhm.
It was 60 by 45. We had the square, and we came to the 50% square of the weekly. So this is the deal. If that's a square, we retest it. We're going to continue back higher. Well, that 95 needs to be held on any kind of a pullback. Okay.
Mhm.
Otherwise, we could probably go back down to the other 1/3 and finish it up around 93. So that's kind of what I'm looking at on the weekly basis. And if 95 holds, we're probably going to take out the fork. And if it does that, it's going to be very heated. We're probably going to go to 90, which is hard to believe, right?
Wow.
Not overnight, right? In time.
Mhm.
Just like we did over here, right? That wasn't a big deal.
But those are really good levels and good markers to know which way to go, which way we're going.
Yeah, I mean, look at this. Like the last move came up to 90, corrected to 90 low to low. Eventually went up all the way up, past almost to the next 1/3 line.
Mhm.
So not like it can't be done. And so here we are. So I think level by level, we got to watch these. And you guys can follow us on Twitter. We, at least the US dollar and all the currencies, Ben updates it constantly. So
Mhm.
be on top of it. And as we always do, take a look at the euro. Last week, we spoke about this making higher lows and how if we break above this, about the quarter line, around 138, that we're probably going to go test the full square from below. And we're trying to do that. So the next key is to see if this pullback can hold above 138, 40, 50. And if we can hold above this range, which is really structural support, we should go up and tap 155, 156 area just as a minimum.
Mhm.
Otherwise, I think it's going to continue weak. And if we get below 138, back in the chop zone and probably go test the lows next time.
Mhm.
Just how it works, right?
That's right.
And looking at the weekly euro again, these squares have been just perfect. We made the lows on the 1/3 level here, the green lines, and we were looking for a retest of the half square. Well, there's a half
Got it.
square.
Mhm.
And so we're, that's resistance there on a weekly basis. So it's fairly strong. And that's at 150. So keep, you can use those levels, the daily and the weekly, to bracket your, use them as brackets on your chart and help you figure out where the key levels that we're talking about are.
Mhm.
That's about it. Ben and I were joking the other day about, every week we talk about levels and where it's going to go, markets are going to go, and next week it gets there. So we were thinking about making a highlight video of us talking about, some market and then what happened later, right? And
Yeah.
so to say these levels have been working really well, and I hope you guys are making good use of it. And
Absolutely.
and if you like what we're doing, please subscribe and share and like the videos and maybe leave a comment. Either way, just so just to help us, any kind of comment, constructive comments are good and they're welcome. And thanks. Okay, Ben, let me put it back to you.
Excellent. Really good review.
Well, how fast things can happen,
Interesting spot, huh?
eh?
So the NQs, I've been talking about this for months now, since we made this high in November, how we were struggling mightily with this around 16,400 level. And this is generally what happens if you can't get above a level after trying multiple times. You get a fast move down to the bottom of the square.
Right.
And that's the low on Monday. So we found a low Monday on the square, had a decent couple day bounce, and then pulled back hard off of that. Given where we are, since we're below the half square, I think the weight of the evidence is going to be, we're going to come down and test here, and either we hold. If we can hold, it'll give us the launch pad to move higher. And if we can't hold, which I think is more than likely, we're going to set a new low for this swing.
Right.
It's not a healthy market. The NQs have been heavy and they've been leading to the downside. And Barrie and I were talking on Friday on this, this move from, late in the afternoon to the close. It was led by NQs. And when the weakest, what has been the weakest part of the market leads, that's generally not a healthy sign. So, the bias next week is to, minimally we're going to test these lows. More than likely, we're going to make lower lows. And I think the NQs will probably end up leading to the downside. But we'll see. We'll see. We know the marker. We know if we clear this area up here, which is, around 15.8,
Right.
that'll open up the,
Upside.
another attempt to the upside and try and break this line and make new all-time highs. But as long as we're below that, the pressure's to the downside. So I think we'll see that kind of some kind of move like that next week to the downside.
Mm-hmm.
Next thing I want to talk about is the 30-year Treasury. Barrie touched on it. My views are a little bit different, but we have the sort of same conclusion, which is the weight of the evidence remains to be to the downside. We had this pullback. This is classic, right? This is how you use the squares. We broke to a lower square, pulled back, tested the square 3 days this week, and failed. And when that sort of happens, you usually get a fast move. Friday's move was a big move down. We should minimally take out these lows here from earlier in the week. And as Barrie was talking about, the lows from last March are certainly going to get tested if we take out these lows here. So we're looking for the half square as an initial target. And then once we get to that point, depending on whether it can hold or if it gives way, it's either going to be, we're going to look to come back up here, or we're going to head back down and make lower lows and new lows, in the 140s. I know you covered bonds. Anything else to add looking at the chart here?
No, I think we're good. We're good to go.
Yeah, it's to the downside is the trade, is the path of least resistance, and we're looking to take.
And we have a nice trend line there that's useful. Already took a hit, held.
Mm-hmm. Next one we want to cover is corn. Corn, as anybody that's followed these recordings and these videos on a weekly basis knows that we were getting interested in corn as we came into these lows. We had basically made a false break low type here and shot right back above it. And then we've been seeing a series of higher lows and higher highs as we've come out of the hole in September, October. We're at an interesting spot now. It's been kind of grinding for the last few weeks. But the key thing is that even after this sharp move higher, the correction has been more in time and more sideways, and we're holding above this important full square area, which is around 590, 589, 590. As long as we hold above this, the odds favor the resolution of this is going to be to the upside. So we're bullish on corn, like the way it's been acting. This bit of a mess here is kind of fourth wave-ish. So as Barrie was talking about with one of the other markets he was looking at, Worst case scenario, we're going to go up and have a failed fifth. Best case scenario is we break out and get a full fifth where we can run, maybe up into this full square or higher. That would get the full square would give us a move to 660. Anything you have to add on corn?
No, I think you covered it well. I think we're good.
Okay. The other grain I want to cover is beans. Very similar pattern to corn is that we saw a low in late fall, early winter, then a series of higher lows and higher highs, nice strong move out of there. And this past week, we've been big moves up and down, but basically going nowhere, which is wave 4 type action. As long as we hold above this full square area in the 1350 area, we're looking for a bullish resolution and higher prices in beans as well. Interesting thing is on Friday, we also hit full square timing.
Right.
So if you look at what happened, a couple previous ones, we chopped around for a week and then took off out of there. Over here, we made a high and then pulled back into, started a down move. So there's been a lot of good activity around full squares looking back at the chart. So we'll see if this week brings anything timing wise, and maybe we get that fifth wave move starting this week coming out of here on beans. Anything to add on beans?
No, I think that's a good call. I think key level to watch would be the full square below us, and as long as we're above that, I think it's on firm grounds and can move.
Mm-hmm.
Yeah.
Next one I want to talk about is nat gas. This one we had a big winner in the late summer, early fall. Caught some of this rise up here, and it's sort of been a really violent and aggressive pullback that we've seen in since those highs in late September, early October. But what we've been watching and noticing here during this whole mess, we were looking to see, okay, when we break out of this, how's it going to happen? Well, the first thing we did was we made a false break low, right on a trend line, which, got a very strong reaction coming out to the upside. That's the first bullish side, right? Okay, this thing is over. We're now doing something different. Now we've gotten the first pullback off of that big move higher. And provided that ideally we stay on top of this full square, which is around the 389, 390 level, the next move higher minimally would be an ABC and potentially could be a wave 3 to the upside. So nat gas is now on the radar. It's set up to where we can have a very bullish move out of this formation, provided that we hold support, we don't make any lower lows, we don't break the trend lines on the downside, and we hold in this area, giving us another higher low that we can trade off of. What are your thoughts on that gas here, Barrie?
I'm actually a little scared.
Yeah,
I'm just not used to these kind of moves. But look, I think, well, if we're going to get that bounce off of here, that four range is where we want to watch, right above the square there. And I think there's structural support below that, below 4. You can see clearly, right? You got a whole entire quarter square's worth during December and early January. So as long as we hold above that, I think, yeah, we can take off. And if you break that trend line, it's really going to go.
Absolutely.
And I don't think we're in a time window where it's going to grind its way up. I think it's going to be very quick, because look at the volatility, right? It hasn't really died down necessarily. So
no.
So
and the other thing I like is this whole pullback was very bullish. If you look at the price action from 2020 and early 2021, we're still above that. I mean, we haven't even tested those levels yet.
Right. Didn't even get to the half square.
No, couldn't get down to the half square.
Yeah. So it's bullish. What comes to mind is like cocked and ready, right? It's ready to go. It's just a matter of when.
Right.
so long as it's above 4 or that full square, or the second square up, 152 degrees up, I think it's in a bullish position.
And with a market like this, you have to highlight it early. The reason I'm highlighting it early is once this starts happening, it gets tough to chase, right? It's hard to get in. At least I find it difficult to get in. So I like to get in on these pullbacks that hold support, because when this stuff starts, you're thinking like, oh, geez, I missed it. It's going to pull back. It's going to pull back. Well, there's a week and a half worth of price action.
Yeah.
So with these kind of markets, you're not anticipating it, but you're saying, okay, if we do this, then there's a good probability that you're going to get a bullish resolution. And I think we have one of those situations now.
Right.
Last one we want to look at is cocoa.
Mm-hmm.
Now this has been a sleepy market. Essentially, we've been in a sideways triangle for 6+ years. But just this past week, and Barrie and I were talking about it, we either talk or we instant message during the day as we see things. And I said, I think it was on Thursday or Wednesday, I said, Barrie, man, something's going on with cocoa. There's activity with cocoa. Something's happening. And this is the week of cocoa.
Yeah.
Every single day we went up. Even this little inside day, we still made a higher high. So 5 consecutive days of higher highs. And in looking at the pattern, again, the setup is there that if we, on whatever pullback, can make a higher low, I'm going to be a buyer of that low, because the next move up could be a powerful wave 3 type move. And looking at the weekly and the monthly charts, it will be a breakout and a retest of a 6-year plus triangle. So you talk about a base for acceleration and a move higher. I mean, I don't think there's any doubt if we actually get the breakout, we can hit this square over 3,000 and then even going higher to higher squares because of the length of time this thing has been in this channel. I mean, I think when I was looking at it on a bigger, like a monthly target, you're talking about 3,400 up in here, 3,420 as a target.
Right.
First, we got to break out, and we've got to then stay on top of that previous resistance level. But if that setup is there, something like cocoa could really have an explosive move higher.
Well, now that we're at the upper range of things, I think these pullbacks can be checked out, little by little. And if we clear the upper square, then pullbacks definitely can be traded.
Absolutely.
So we're getting there. We'll see if this one's a real deal or a dud. So,
I mean, listen, last year it did a false breakout on me here. Right. I got caught up in this, and I knew my risk. And once we got back under the square, I just cut it. But this is the possibility, and this is what's been happening.
Well, then we stopped exactly at the full square back in
down
December,
here,
right?
Yeah, and that was bullish, right? Another higher low,
right? Higher low,
and then this move off of here, we got another higher low. And then when I saw this kind of move coming, I was like, man, that's powerful, right? It's this type of move. And the question is it gonna break out this time or not? And we know the level. We know where to watch it. We know how it has to act. It needs to get above and sit on top, and then we go full force higher. So just bringing that to your attention. That's all I have in terms of the commodities. We're looking to stay with shorts or add to shorts on bonds. Corn and soybeans, we're looking at the longs. Natural gas, we're looking at a possible long setup, and cocoa as well, possible long setup. So this coming week is big on timing. We're really big on timing in my work. So we're going to be watching not only the ES and the NQs, but multiple markets to see the effects of this cycle and what the next move is going to be based on the new cycle coming in. What are you focusing on this week?
Well, the S&P, NASDAQ, for sure. Also watching crude very closely
Mhm.
and to see if the dollar continues to slide or not. So there's some key things to watch. Of course, gold in the background, see what's going on.
Absolutely.
Can't really take the eye off that thing. So
No, because it's another big base that's getting ready to make an explosive move.
right, and bonds, of course, to see how we end up with this, post pullback action here.
Absolutely. Well, look, have a great week, everybody. Barry, have a great week, and let's see if we can survive and thrive in this crazy market.
For sure. Thanks, Ben. Have a good
All
week.
right, take
everybody.
care. Bye-bye.